Boom! We are live. We are live. Good afternoon, my dear friends here, Nico and Jake. How are you guys today?
Just perfect. It's a more convenient time, not like the last time in California when it was literally like 6 o'clock in the morning. So 3 p.m. is a more convenient time, to be honest.
That's fantastic. What about you, Jake?
I'm good, thanks, Pierre. I've been dog sitting this week. I'm looking after a 5-month French bulldog puppy called Louis. So if my transmission suddenly goes down, it's probably because he's chewed all the way through my internet cord downstairs. Just warning you.
And if he bites off the leg of your chair or something, we now know that you're an expert in
Anything
German.
goes wrong.
German
Anything goes wrong. Well, that's true. But if anything goes wrong on this stream, blame it on the puppy.
Blame it on the dog. That's always a good idea. And good morning to those of you who are tuning in. Good morning, Bodgan. Nice to have you here. Good morning, Lars. Or good morning, good afternoon, rather. I didn't wake up that late, to be honest. But yes, it is a little bit upside down. And we have a very quick request here, Jake. Eliana immediately here. She wants to see the dog. It's a it's a tough request. Maybe if we are extra nice to you, Jake, here today,
Yeah,
we get the
I'll
opportunity.
put a picture on my LinkedIn after the stream. He's
Right,
probably a bit camera shy, so we won't get him live on air.
All right.
So
all
the rumors are true that you're pretty close to Tom Holland, and as of now, you're taking care of his dog because he has so that's the dog of Tom Holland, right? He's a neighbor of yours.
Yeah, first I've heard of it, Nico, but we'll go with it. Yeah, sure.
we have a replacement dog here at least. So for
There we go.
In the disappointment of not being able to see Jake's dog, we bring up little Valton here. So my 6-year-old little Labrador. He always sleeps on my feet when we do these recordings. So that's what keeps me awake and alert. But we can talk about dogs all day today. And that would be a great thing as well. Maybe we should start. I don't know, dog sitting next or something. But that would be a future venture. But today we have a great episode ahead of us, and a lot of intrigue, a lot of quarterly reports, a lot of movement in the industry as always. To summarize a little bit what we have in front of us in this hour together here today, we're gonna continue on this 10 by 5 that we started a couple of weeks ago here with Nico. It's gonna start by just reading 10 news in 5 minutes. It is an impossible task, but he's still gonna try. This will be followed by Jake, who will do a little bit of a summary on the quarterly reports, on the earnings reports that have come out from some of the major iGaming organizations, such as Flutter, Catena Media, RakeTech, GIG, Supergroup, and so on and so forth. So a little wrap up there on the movement of the industry. This will be followed by the big news that came out this week in the record regulatory settlement that Entain had to pay £17 million to the UK GC based on social responsibility and AML failings. This is the biggest fine the regulator has ever given out to an operator. Of course, it's not on iGaming Next weekly news unless we speculate a little bit about Disney's next move, and this week is not an exception to that rule. Also ahead of us, we have a little bit movements in California. The referendum is coming up here in November. Vote Prop 27 will online sports betting rather, be legalized. There is some additional support to this bill now that we're going to talk about. And another really big news from a US point of view and from an industry perspective as well is that FanDuel was able to generate revenue. They were able to generate positive EBITDA contribution from the US operations here in the last quarter. Surprise, surprise, you could say. And very good news for Flutter. Very good news for FanDuel, and the markets reacted very, very positively to that. So let's see if we can cover all of this in just 1 hour today. And what do you think, Nico? Shall we jump over to you here for your summary of the week? Do you think you can do it in 5 minutes today?
Yes, of course. 5 minutes, no problem at all.
All right.
If it's all good. Keep your fingers crossed.
Absolutely. Okay, maybe we can get a timer here at the same time just to spur on There we go. Yes. All right.
Yeah.
Like 5 seconds,
All right, time.
but all good. I'll just continue. So, there's an update here in Germany with respect to slots licenses, as another Gauselmann brand has been giving a license for online slots in Germany. So the brand is called a Solus Ortus Service, founded in June 2021. And belonging to the Gauselmann Group, which are running crazybuzzer.de, has been granted a license by the authority of Gemeinsame Glücksspielbehörde der Länder in Halle, short GGL. As of now, we are looking to 7 licensed operators. And 5 of them are either Gauselmann or with a Novomatic background, and they're running 10 licensed sites in Germany. Heading over to the US, the Disney or a Disney investor pushes for an ESPN spinoff to unleash the sports betting potential. So the Third Point CEO Daniel Loeb, who is running the hedge fund, and they are holding roughly 1 billion worth of shares in Disney, wrote on Monday to Bob Chapek, CEO of Disney, that ESPN's split from Disney would give America's best-known sports media entity a chance to embrace sports betting it wouldn't have under its current cooperation umbrella. So he's looking forward to splitting things a little bit apart. Then another topic, sports betting in Brazil is expected would generate almost $4 billion dollars in Brazil during the Qatar World Cup. So specialists estimate that the regulation would generate around 588 million a year for the state of Brazil, in addition to the roughly $400 million from the sale of operating licenses. And the World Cup alone would be worth like $4 billion in bets to the country. Then heading over to Kansas. Kansas Racing and Gaming Commission approve sports betting regulations. It's quite funny that always prior NFL actually starting, some of the states in the US try to push licensing through, and Kansas they already agreed on the licensing, and they're, fingers crossed, want to open up the state until September 8th with the launching of NFL. Heading over to Canada, the supermarket giant Kroger applied for licenses to host sports betting kiosks at 42 locations. What quite specific is that, first of all, the supermarket chain submitted applications for all 42 of its Ohio lottery pre-qualified location, and they submitted the license just prior the deadline, which was at August 16, to be able to launch its kiosks on January 1st. What's quite specific is potentially thousands of sports betting kiosks will be flipped on upcoming January 1st in Ohio. And the state of Ohio undertakes the largest ever simultaneous launch of sports betting ever attempted for retail kiosks, which will all be switched on by 1st of January 2023. Heading a little bit over once again to the US with respect to handles. Illinois is closing the gap to the second place of monthly handles, as Illinois Gaming Board released just the June sports wagering revenue, which revealed that they had a handle of 628.5 million in handle for the month of June, and they just narrowly missed the second place spot for highest handle. Guess what? Which is held by New Jersey with 633.6 5.2 million, so they just missed it with roughly 5 million. And of course, New York, with a handle of 1.06 billion, is just off the charts for any other state in the US. M&A, Odin GG gains or finished a Series A funding, and they raised 4.5 million pounds in a Series A. So the esports odds feed, risk management, and iframe provider, they just gained or finished the Series A funding with 4.5 million. Shout out to the Odin GG. Then Inspire targets a discounted buyout at or off play AGS for 370 million. They just made an offer based on $10 per share, which then comes up with an overall acquisition price of 370 million. Last but not least, and I'm pretty sure I'm still within the time, Uruguay, the Senate passed a bill to legalize online gambling. So the Finance Commission of the Chamber of Senators in Uruguay, they have approved an online gambling regulation, which has now been headed over to the Chamber of Deputies, and they will then then that will be sent over to the Senate for a full vote. So fingers crossed, all worked out within 5 minutes. I'm good to go. Thank you.
I think let's just rename this to 10 in 10 instead for 10 for 5. But this is great, Nico. Thank you so much for the overview here of the industry. And we are obviously right in the middle of the reporting season at the moment, and for our lovely editorial team, this is like Christmas and birthday at the same time. And with that, we were thinking today, if Jake, perhaps if you could do a little bit of a rundown of the latest quarterly reports here that have come out in the last 7 days or so.
Yeah, definitely. Well done, Nico. First of all, I thought you handled the pressure brilliantly there with the timer ticking down. Don't think it was 5 minutes, and I don't think it was 10 stories, but who's keeping score? But yeah, so super busy time for us, as Pierre said. I think there's been 17 companies report their Q2 results in August already. So very difficult to keep track of, and I think very difficult to pinpoint any sort of cross-industry patterns that have emerged, because it's right across the ecosystem, right? We've had operators report, we've had B2B suppliers, affiliates, like everyone right across the ecosystem. So each company has a different story it's trying to tell in Q2. The biggest talking point, I would say, is those that are experiencing macroeconomic headwinds and are blaming kind of revenue declines on the wider economic environment versus those that have seen no effect. Obviously, a lot of that is down to which markets they operate in, which verticals they offer to their consumers. Certain countries are feeling the pinch more than others, so that all has an impact. But it's just interesting how these companies relay these narratives to their investors. One company today, Catena Media, I would say, put out the bleakest statement to date about the macroeconomic climate and how that's affecting its gambling business. The CEO, Michael Daly, was really transparent, to be fair to him. He said, a sharp deterioration in global economic conditions affected trading in multiple markets, denting performance in part of our online sports betting and casino portfolio, just as we had taken on extra costs to support new market launches and product upgrades. So they're feeling the squeeze quite a lot. He said, during the quarter, we took steps to reduce our expenditures in response to this changing landscape, scaled back strategic investments from planned levels. And although they saw an initial effect of those cutbacks, it was still insufficient to compensate for the impact that the macroeconomic climate is having. So I would say they seem to have been out of all the companies to report in Q2 among the worst impacted, and their second quarter revenue went down by 4.9%. This is why it's interesting. Then you have companies like Leo Vegas, for example, which is obviously an operator and not an affiliate, so swings and roundabouts. But their CEO, Gustav Hagman, said most of the main markets continue to develop well. We cannot see any signs to date that the current macro situation with high inflation and rising interest rates is impacting the habits of our players. So it's two completely different stories, albeit in the same sector of gambling. I just found that really interesting, really.
Yeah, absolutely. And what seems to be emerging here is these two narratives where some organizations, I know that Entain mentioned this in their report and in leading up to the report, Catena Media, others that are kind of blaming the misfortunes within the organizations and weak report on the macroeconomic climates. At the same time, other organizations like Leo Vegas is claiming that they can't see any effect due to the macroeconomic climate. So the question is a bit if kind of poor operational execution is being blamed on the macroeconomic climate here. Obviously, it's tough comparables to last year. 1 year ago, we were still dealing with COVID lockdowns, which we all know at this stage gave a boost to our industry. And it wasn't really made clear in those quarterly reports that we had this kind of temporary uplift of the industry. And now instead, this kind of downtick in revenue is being blamed on the macroeconomic climates of today, rather than the tough comparables or tough market conditions, or just the fact that they are just not able to outcompete their competition.
Yeah, exactly right. And it's not all sunshine and rainbows for those companies that haven't experienced an impact from the macro. Like you said, there's obviously regulatory headwinds across Europe. There's the really tough comparative period with COVID in 2019 and 2020, as you mentioned. Obviously, there was Euro 2020 as well, so there's no major summer tournament this year. And also the cost of improving safer gambling measures, so like implementing affordability checks and that kind of thing, if for businesses exposed to the UK. All these costs add up, but then if you're also being impacted by macro on top of that and a whirlwind of other kind of inflationary factors, it doesn't make for ideal reading for the sector, really, especially going into Q3 and Q4.
Yeah, absolutely. And on that note, Jake, I wanted to kind of look at how the markets have reacted to some of the organizations that have reported this week and last week. And we're going to start here just by bringing up, if I can see correctly. Yes, we got the right one. First of all, just the S&P 500 index. So just to see kind of how the stock market is doing overall, this is a good benchmark for where you should be. Where you should be as an organization on the publicly traded markets. And essentially, over the last month, the S&P 500 index have increased in value by about 10%. And so you could say that if your share price in your organizations have increased 10%, you are kind of following the macroeconomic climate of the last month. And if you are below the 10%, you are trending worse than the overall macroeconomic climate. And so, in other words, the last month has generated a lot of optimism on the stock markets amongst the investors in general. There are a couple of factors to that, but the main factor is the fact that inflation has started to slow down in the US, and that has triggered investors to feel more positive for the future. And so we've seen a 10% uptick on the S&P 500. So let's use that as the baseline here when we go through the iGaming industry. And it's a bit of a mixed bag here, and this is what we want to highlight a bit today. That some organizations are doing really well in this climate, whereas others are not able to take advantage of the general optimism of the last month. So if we start, there we are, SB again. If you start here by looking at Apple as well, that's another good benchmark because Apple is a tech company, right? So albeit it's a hardware tech company, but still good benchmark. Apple is up 15% over the last month. So you can see a company that have actually beaten the S&P 500. But if you move into the iGaming industry, we start here with Supergroup. Supergroup is up about, did I notice correctly? About 13% up in the last month. We can see Entain, who is up 25% in the last month. So very positive on that front. We can look at the Gaming Innovation Group, GIG, up 28% here since they launched their very successful quarterly report here the other day. Really, really positive. I think GIG's share price is the highest it's been in the last 2 years or something like that. GIG has really been able to turn it around. But then if we start to look more at the red numbers here, we can look then at Catena Media. Catena Media is down 4% over the last month, but they are down something like 30% over the last quarter, something along those lines. Next up, we look at RakeTech here, competitor to Catena Media. RakeTech is down 4% over the last month. They also reported the other day here. We get EBIT. So formerly, I think, is it Esports Entertainment Group? They used to be
Esports Technologies.
Esports Technology is easy to get them mixed together. So
yeah,
former Esports Technologies, who have had a horrible year, but over the last month they are down 1.4% after kind of their restructuring plan here that they announced and not meeting shareholders' expectations. We move on. Okay, we have Catena Media again. Sorry about that. And finally, we can look at Flutter, then, who reported the other day, which is up 39% over the last month. And interestingly enough, to me, is the fact that Flutter was able to generate so much optimism pretty much only based on the fact that they were able to generate an EBITDA positive quarter in the United States through FanDuel. This was the big headline in the quarterly report of FanDuel, of Flutter rather. However, the positive EBITDA contribution is slim, and they are also communicating that they are expecting a $300 million EBITDA loss in H2 of the rest of the year. Increased marketing spend, entering new states, so on and so forth. So this is obviously a temporary small positive EBITDA contribution, but nonetheless they proved that they can be EBITDA positive in the United States, which is the promised land for the iGaming industry here. So despite the fact that they decreased the total EBITDA by 19% in H1 compared to H1 last year, they still was able to regain 30, almost 40% markets share value on the open markets, only based on the news coming from the US here. So that is how important the US market is, and we can see obviously that based on these reports, also DraftKings has seen a great uptick in the last month as well, with optimism around, or like a renewed optimism around online sports betting and online gambling in the United States. What do you guys make of this?
Yeah, no, I think that's all good points, well made. And I think as it's Q2, we're obviously halfway through the year now, which means companies are able to be a little bit more accurate and provide some more guidance on their full year forecasts and expectations in terms of revenue and EBITDA. And that's obviously key things that investors look out for when making their decisions, which causes, peaks and troughs in stocks. And we've seen some quite dramatic ones in the wake of these announcements, not least Flutter, as you mentioned, after the FanDuel profitability in Q2. But yeah, it's been a very volatile reporting period for gambling stocks, with one eye on the kind of full year 2022 revenue guidance and whether companies are going to miss it, exceed it, or just come in there or thereabouts.
Yeah, absolutely. And we can also report here that DraftKings, which is a more speculative organization, you could say, they don't have the international business behind it, but they are up 55% on the markets here as well over the last month, with a market cap of nearly 10 billion USD. We are approaching again like these like really high market caps for these like very speculative businesses. So in order to justify that market cap, DraftKings eventually would need to make close to 1 billion USD EBITDA. I mean, today there is there's like only Flutter and Entain that is able to generate this type of EBITDA today. I mean, it's very high market cap we are talking about, even despite the fact that there's still a long way to go on the US market. So this is quite interesting. Speaking about FanDuel and Flutter here, I wanted to also kind of show this graph of the geographical split of Flutter's revenue by region that was posted here in the iGaming Next article. Just again to highlight the fact that Flutter now generates more than 30% of their total revenue from the US. The UK and Ireland is 32%. And so together, the US, UK, and Ireland is 63.2% or so of the total revenue. I just wanted to point out here, like, I mean, it's quite a speculative, again, markets here with a lot of headwinds in the UK and Ireland. Regulation comes up in the UK. Still, the US has a lot to prove here. Australia makes up 18% of the revenue within Flutter, and rest 18.68 is kind of split by various regions here. So it's interesting to see as well. The geographical distribution is something that all operators are looking at the moment, with considering how quick things can change in individual markets, particularly in Europe, where, again, as we saw last year, the Netherlands market closed the door for many operators from one day to the other. Another little interesting nugget here as well is from our US editor, Ryan Butler, in regards to FanDuel. Just to put in context how dominant FanDuel is in the United States. In the 15 states where they are currently live, FanDuel is bigger than all other operators combined. They have a market share of 51% in the 15 states where they are live in sports betting. And they are twice as big as the two biggest competitors combined. I suppose it's DraftKings and BetMGM.
Yeah.
This is just a remarkable statistic, because we often hear kind of the discussion around like the big four in the states, the FanDuel, BetMGM, DraftKings, and Caesars. But in reality, we are talking more about there is FanDuel, then there's nothing, and then there is DraftKings, Caesars, and MGM, and then there's also nothing, and then we have another like 30 operators. And so FanDuel has really been able to dominate the US market so far in a way that you don't really see in other markets. Like I don't think there is other markets where you see this kind of like 50% plus market share. Especially not any of the major markets where you see that. Like you certainly don't see that in the UK, for example. What does this mean for the future of the American markets? Would you say, Nico? Go ahead, shoot.
Yeah, you know, it's quite interesting, and obviously they have one of the best products out there, and that's why they actually, you know, first of all, gained that market share. They have obviously been able to, you know, convert their DFS fan base or customer bases to become actual sports bettors. So yeah, it's all pretty much product driven. Something which Todd Householder always points out within his speeches as well.
Absolutely.
I think consolidation is another thing. What it means, like you said, it's not sustainable for the market to have 30 operators in it that are barely getting 20% market share between them. So you're going to see the bigger companies buy the smaller companies, fill up bits of their portfolio that they're lacking in, and then that kind of top 5 or 6 will become more established over time, like we do have in the UK. Really, there might be 10 or 11 brands here, but only sort of 4 or 5 of them account for any kind of material market share.
Yeah, absolutely. Thank you for that, Jake. And before we pass on, we are midway today in the recording. I just want to quickly just say thank you to our sponsors here. I write it down each week, and we really want to make sure that that people know that these sessions are made available by our very good friends at Playzone and Simpler. So really big thank you for keeping us alive here. Obviously, Playzone, one of the most exciting game studios of the industry, and Simpler, forward-thinking payment provider that we definitely love to work with. So thank you to those guys for sponsoring us, and also this as midway in, really nice to have a nice and solid crowd here today. Hello guys in the chat who are saying hello to us. Right, hello back. I think Nico, there's a request here in the chat by Stephen Armstrong, who wants you to say hi here to Paul. So I think this means a lot to Paul. So why don't you go ahead?
Yeah. So sometimes, you just need to let go. So that's why I'm not specifically greeting like the guy from the UK. But shout out to Stephen Armstrong. Thanks for joining us as well. You're a good guy.
All right, fair enough. We leave it at that. And so let's continue on here to the next point. I would like to jump over to the UK while we are on this topic, and specifically Entain here, who managed to attract a £17 million regulatory settlement that they have to pay to the UKGC for social responsibility and AML failings. This is the biggest regulatory settlement, the biggest fine that any operator has ever had to pay in the UK. Jake, you put this report together. Can you give more context here on what happened and why did Entain have to pay this fine?
Yeah, definitely. I think Sonia actually wrote this one, so I don't want to take credit away from her. But yeah, absolutely massive news in the UK. £17 million record settlement, like you said, for social responsibility and anti-money laundering failures. And I've kind of made the excuse for operators in the UK previously that a lot of these rulings are historical and relate to kind of, behavior in 2017 and things before the industry got to grips with responsible gambling and really started investing in that area. But all the failings in this case relate from December 2019 to October 2020. So this was recent and during the peak of COVID, when obviously the whole industry was kind of riding the crest of a wave. So it paints a pretty miserable picture, to tell you the truth, as do some of the specific shortcomings as highlighted by the commission. So one customer was allowed to deposit up to £742,000 in just over a year without any kind of source of funds checks. Like another customer was able to deposit £230,000 over an 18-month period and was only contacted once by the operator during that time. And there's some more details in here about how some of these affected gamblers were like particularly vulnerable in social housing in the UK and things like that. And these things really need to be acknowledged by operators in the current environment. We can't sort of keep making excuses for these sort of misdemeanors to slip between the cracks. And I think that's coincided with the Gambling Commission as well and their approach, because they're getting a lot stricter on licensees. We're expecting them to take quite a forceful role once the white paper has been published from the government. But you can hear it in the tone of the chief executive of the Gambling Commission, Andrew Rhodes. He said, our investigation revealed serious failures that have resulted in the largest ever enforcement action to date. They were completely unacceptable. And then he said, they should be aware that we will be monitoring them very carefully, and further serious breaches will make the removal of their license to operate a very real possibility. So this is like, a serious suggestion of license revocation for the second biggest operator in the UK market. So yeah, kind of no more Mr. Nice Guy from the Gambling Commission, I don't think.
Yeah, it's a pretty serious remark to make, to actually threaten the license of a multi-billion dollar organization. And I want to just highlight a pretty funny tweet that our dear friend Alun tweeted out here the other day. Entain very proudly here in November 2020 announcing that we're delighted to announce that GVC, formerly that was the previous name to Entain, have won the Safer Gambling Operator of the Year award at EGR. And Alun is saying here that I would like to state for the record, I was not judging this one.
I mean, it is funny, but it's not just like EGR or Alan, for example. I mean, Entain is seen as one of the front runners in terms of responsible gambling protocols. They've won multiple awards. They're obviously doing quite a lot of work and investing heavily in their advanced responsibility and care program. So this isn't like an operator that's just neglected all of its safer gambling responsibilities. It's taking them seriously, and it's still kind of in breach of pretty basic license terms and conditions in the UK. So I think, just paying lip service to this topic isn't going to kind of wash anymore, I don't think.
No, for sure. And as we could see here as well, not only did Entain won the Social Responsibility Gaming Award by EDR, but they also managed to win here last year the Social Responsible Operator of the Year at SBC Awards as well. And so, as you point out here, Jake, I mean, they are seemingly, winning these awards, but it doesn't seem that they're able to actually avoid letting these things slip between the cracks, as you mentioned, which seems to be quite basic things. Again, just to reiterate here, one customer deposited £740,000 over 18 months without being approached for a source of wealth. It seems to be a pretty basic failing here on the Entain, not to trigger any checks on this customer. Same with several other customers as well. And so
I think that's the point I'm trying to make, is that people have obviously said, the industry is only as good as its kind of worst performing company in terms of responsible gambling. And Entain aren't that. They're one of the better performing kind of companies in this arena. And they're still falling way short of expectations from within the industry. So work to be done, I'd say.
Absolutely. Let's see what Entain. They also been asked, I suppose, to introduce a new board member or something like this that will oversee implementation of the. Yes.
Yeah, that's quite common practice with these gambling commission enforcement rulings. And that's part of what makes it a regulatory settlement instead of a fine, is that they kind of take on board a lot of this feedback from the regulator. They promise to implement these plans to improve procedures. And one of them is a board member now has to oversee this activity, and also bringing in a third party to audit their RG systems, basically, to avoid this kind of thing from happening again, presumably.
Right. Let's move on to the next point. As we talked about here earlier in the call, it's not an iGaming Next weekly news if we don't speculate around the Disney's next move and entrance into the online sports betting industry here. And one of their major institutional investors are making the case for ESPN to make a spinoff outside of Disney in order to pursue the sports betting opportunities here. The investor is saying essentially that ESPN would be better off to be released from the shackles of Disney in order to pursue this opportunity. Nico, I know that Disney is an organization that is close to your heart when it comes to reporting and follow-up. Can you talk a little bit from your perspective here? What is it exactly that the investors want, and what is the thesis here behind this claim?
Yeah, so I covered this already within the short wrap-up, but thanks for raising this once again. So the hedge fund you're talking about is called Third Point, and the CEO, Daniel Loeb, he actually wrote a letter or a message to Bob Chapek, who was the CEO of Disney. that, you know, if you open up or split apart ESPN from the umbrella of Disney, this would give ESPN some more space to breathe, to actually, you know, embrace the sports betting vertical within ESPN. And you know, the first rumors, not actually rumors, came up last year in September when Bob Chapek officially announced that Disney is eyeing on the sports betting vertical or the sports betting market, with adding this vertical to the offerings of ESPN Plus. So the very, very famous streaming platform they have, and if I'm not mistaken, they have roughly 2.5 million subscribers to their ESPN Plus offering. So of course, you know, with all the headwinds, especially during COVID, you know, the Disney parks being closed, shut down, of course they were looking at other verticals, online verticals, to actually, you know, come up with something where they can actually gain revenues in. And this is what Daniel Loeb, they are holding 1 billion worth of shares into the Disney company, came up with.
And I think the story here, to me in general, is we see now in the last month a lot of optimism around DraftKings being able to turn things around. Flutter, obviously through FanDuel, was able to publish a EBITDA positive result. At the same time, FanDuel generating this 51% market share in the states where they are live. But something perhaps that investors are not considering is what happens if ESPN enters online sports betting, in terms of what market share will they claim. I mean, because we are certainly not talking about that ESPN would generate only new customers into the ecosystem. There will be a cannibalization happening here, right? ESPN would presumably cannibalize customers from DraftKings, Flutter, and other current operators. And the question is, like, we talk a lot about the fact that kind of the dust is settling on the US market a bit. We are seeing the winners and losers emerging. But we have this trump card in front of us with ESPN, for example, and also Fanatics, which is another kind of joker that is sooner or later going to enter the industry as well. It's the world's worst kept secret, I suppose, that Fanatics is entering the industry sooner or later. And you know what happens when these two jokers enter the mix? Is this going to hurt DraftKings in their ambition to kind of claim market share? Is it going to hurt Flutter in their ambition to keep this massive market share that they have generated so far? And this can potentially be one of these like really disruptive moments for the industry when these media giants then enter the North American market eventually. What do you make of this, Jake?
Yeah, well, I mean, you mentioned the DraftKings major stock uplift over the last month and a bit, and I think some of that actually came from rumors that Disney would buy DraftKings and sew it into ESPN and make that you know, a combined sports betting operation in the US market, which would be crazy and shake things up significantly. I think Disney CEO has been saying this for like a year. Every quarter he gets asked about it. Every quarter he says the same thing, and we've not seen much movement at all really from them. I think it's one of those, you have to kind of keep investors engaged in the fact that you're exploring it, but are you really behind the scenes? Surely we would have seen more progress on this by now, and obviously Disney has to be particularly careful considering its core audience and its kind of reputation and association with a vice like industry like gambling. So there's that hurdle to clear as well. I don't know. I think ESPN is making some money from sports betting, but it's only really in like media deals and its sports betting coverage on its sports channels already. Like there's nothing material in there. And if it were to launch as like an ESPN bet or as an actual operator, I think it would probably just be via a brand licensing deal, similar to what we've seen 888 do with Sports Illustrated, for example. So you get a European operator that nobody knows in the US, but you match that with a kind of media brand that is really well known in the US, and you hope that does a lot of the heavy lifting for you. But yeah, sub-licensing the ESPN brand isn't going to come cheap for any US operators. But it could be worth it. It's just an interesting one to keep an eye on, I think.
Absolutely. What do you think, Nico? What happens next?
So first of all, if I'm not mistaken, the first time we were literally like talking about Disney and what are the potential M&A targets, I came up with the probably DraftKings is one of the targets when the market cap was 6.5 billion. So if this turns out, I'm looking forward to a nice payback of Disney as well. And adding one more example to what Jake has just stated, our dear friend Daniel Gretzer with MaximBet, the Maxim, the well-known newspaper or magazine, and then having the MaximBet. And one more thing we should add to the equation as well, the upcoming entering of the zone into the sports betting vertical as well. And as soon as we will, have the first numbers, how they are able to, first of all, cope with their offerings and how many customers they will be able to actually transfer from their a streaming platform to become active bettors as well. This will also, raise the stakes for ESPN as well, as investors would then assume and expect ESPN to be at least as performing as the zone actually does. As it's pretty much the same approach which ESPN actually is doing as well. So it will be quite interesting, first of all, to follow this one as well, and to see how the peer group actually performs with the zone as well.
Absolutely interesting kind of timeline ahead of us here in the US market. When you think that you have a grasp of the US market, forget about it. It all changes overnight here by the entrance of these giants all of a sudden. Last point of today is while we are in the US, let's stay and let's travel over to the West Coast, the state of California. The fifth biggest economy in the world is California on its own, slightly bigger than the total economy of India. This is an absolutely massive battleground for the online sports betting industry. In November, a referendum will be on the table with Prop 27, which is essentially a vote on if the state of California will legalize online sports betting or not. There is fierce competition from the local tribes that have a great power in the state of California, who currently has a monopoly on any gambling activity within the state of California. Right now, you see the tribes owning some of the casinos. I've been to the Bay 101 over in outside of San Francisco. Great poker room, if anyone is over there. And this is expected to be certainly in California, the biggest political battle in terms of donations and money going into the campaigns here in order to get this bill legalized or declined from both sides of the aisle. Hundreds of millions of dollars being pumped into very expensive marketing campaign and very aggressive marketing campaigns in order to persuade the voters to vote either yes or no. The prop has gathered quite a lot of opposition. The Democrats of the state of California has come out against Prop 27, so against online sports betting. The National Association for Colored People in America has come out against the Prop 27. California Teachers Union has opposed the bill as well. And of course, most of the tribes in California are opposed to Prop 27 as well. And so they have a large amount of resistance here. But at least on the positive news, it was reported this week that Major League Baseball has come out in supporting the Prop 27. And I don't know, how about you, Nico? Can you follow up on this story a little bit further, Major League Baseball, and just perhaps give a little bit more context to the state of California as a state of play?
Yeah, so First of all, we already touched down on the volumes, the expected volumes, a little bit already in the past. That you have to pay an upfront fee of $100 million to be granted a license, if I'm not mistaken, for 10 years. So it's an upfront fee. Then we have two opposing propositions which are actually in the battle. It's Proposition 26, which would be in the favor of the tribes, of the existing regulation. So they're continuing their monopoly, and the proposition of 27, which is in the favor of the Magic 7, or backed by the Magic 7, like the FanDuels, the DraftKings, the Caesars, the BetMGM. And now, as you already pointed out, we have some not supporters or supporters of Proposition 2026, which are all denying Proposition 27. And with the MLB, the Major League Baseball, which is the ultimate U.S. sports, we have a statement of the chairman is which reads as follows: as legalized sports betting continues to expand across the country, Major League Baseball remains committed to protecting the integrity of its games and creating a safe experience for fans who wish to wager on those games. And Proposition 27, the only measure on California's upcoming ballot that would authorize and regulate online sports betting, includes strong integrity provisions designed to help MLB carry out those commitments. So with the ultimate US sports having the back of Proposition 27, this is the first, if I'm not mistaken, and correct me if I'm wrong, it's the first ever league who is backing any proposition of sports betting becoming reality before it actually comes reality.
Yeah, I mean, you can see why. Obviously, they're behind it though. Like, they have everything to gain from online gambling launching in the state, and very little to gain from sort of retail-based tribal gaming. When you think of the huge betting commercial partnerships that most operators in the US have struck up with the big leagues like the MLB and the NFL and the NBA, etc. Yeah, it's not surprising to see them sort of throw their weight behind this. I think it's funny, like we talked obviously about FanDuel profitability in Q2 and kind of the full year earnings forecasts of US operators, and a lot of them hoping to reach profitability by 2023. I mean, if California, if Prop 27 passes on the ballot on November, those are going to be torn up, right? They're going to be completely torn up and start again, because every new state that legalizes adds more money, more marketing dollars, more costs onto the bottom line. California being the biggest one, with $100 million license fee or whatever it is likely to to even dwarf New York in terms of how expensive it's going to be. So yeah, could have major impacts for those financial figures we were talking about earlier on.
Yeah, absolutely. And let's just repeat that one more time. So in order to, if this Prop 27 is voted yes, and the regulation comes into force, the license fee is $100 million, right? It's unheard of, essentially. And this is what is proposed by the consortium here of the Magic 7, as Nico pointed out. Also, this final point on this as well is that the polling is looking very bleak at the moment, with only 33% currently in favor of Prop 27, and a quite small amount of people are kind of undecided on the bill. Only about, I think, something like 7 or 8% are undecided currently, if I'm not mistaken. And so there is a massive uphill battle here. But we did a podcast here earlier this week with Bill Pasquale III, one of the leading lobbyists in the North American market, and he pointed out that he visited Jason Robbins here the other week, the CEO of DraftKings, and Jason Robbins is very bullish on the state of California still, and he has going kind of more aggressive in the marketing campaign, investing a lot of money. He feels that they can turn the tide. He feels like there is a possibility to get Prop 27 enacted here. And just to point out like that the type of marketing that is currently being executed and the type of information we can see here. A retweet by our friend Chris Grove, the original tweet here by Brian Bennett, who got a text message from the campaign here to vote yes for Prop 27, who is, they are basically saying that this is Jen, a volunteer with yes on Prop 27. Are you planning to vote yes on Prop 27? It's the homelessness funding initiative supported by California tribes. And she's following on here. Just reply yes if you intend to vote yes on this bill for more information. And this again goes to show like the confusion that they are trying to implement here by not marketing this bill as a sports betting bill per se, but rather for the homelessness. And the idea is that a lot of the license fee, a lot of the taxes that are generated will go to curb homelessness in the state of California and to help people with mental health issues, essentially. But they are confusing the voters here by suggesting that they have support from California tribes. And while it is true that a few tribes are supporting Prop 27, it is obviously obvious to anyone who is in the know that a large majority of the tribes, practically all the tribes in the state of California, are fiercely against Prop 27. And so this is the type of confusion, this is the type of like negative marketing that you see in the state of California that they are hoping to lead to voters voting yes on Prop 27 without really understanding the bill itself.
Yeah, and this is the issue in the US with anything political, is that everything it has a vested interest. I mean, the poll numbers that you quoted and Bill quoted with a 33%, only a third of residents looking to back the bill. I mean, that was sponsored by the no to 27, yes to 26 campaign. So it's in their interest that the polling comes back, with that conclusion. And that screenshot you just posted there, it said the top backer of this poll financially was Penn Interactive, and they want to see a certain outcome, and that's what these polls are based on. I mean, like DraftKings CFO Jason Park said, we feel good and the polling looks solid. Well, which polls he been looking at? Different ones to the ones that we've seen so far. And just a final thing to point out on California, if I may, is that Caesars actually isn't part of that Magic 7 operators. They're one of the only ones with online betting in the US that have decided to remain neutral, because they also have tribal interests on a retail basis in California. But yeah, potentially they're rubbing their hands behind the scenes as well, hoping that this online bill will happen, just not doing it in public.
Absolutely. Guys, it's been a fantastic hour here. We are at the end of the show today. It's been really great, fantastic insights today. Thank you so much, Jake, and thank you so much, Nico, for all the time making your best to keep us updated here in the Thursday weekly news hours here. Thank you everyone for chiming in today as well, and for giving you guys this nice happy wishes here in the chat. And I suppose we will see you next week again. I mean, Nico, Jake, let's head down as always to the beach. We have a little pina colada. Maybe Jake can bring his dog down to the beach as well. Who knows? We don't know if it's actually exists or not, but we can give it. We can hope for the best here. Yeah. Thank you so much.
Thank you. Bye.
Thanks for listening, everyone. Bye.